Look, if you've ever opened an investing app and thought, what do I actually buy? You're not alone. In this video, I'll show you exactly how to use Stake to buy your first ETF step by step, even if you're starting with $50 or less. And I'll also show you how to invest in dividend ETFs that pay you income, how to avoid overpaying, and how to start small with fractional investing. Now, before we jump in, if you don't already have a Stake account, you can use the link in the description below to sign up. It's quick to set up, and depending on the offer at the time, you might even get a bonus for joining. Once you've signed up, verified your account, and deposited your funds, you're ready to go. Hi, I'm Jay, and I spend way too much time thinking about simple, practical ways to build long-term wealth. No hype, no trading, just strategies that actually work. And the good news is, Stake is actually one of the easiest platforms to use for beginners. It's clean, it's simple, and you can start with very small amounts, which is exactly what we want. So let's jump into the app and I'll walk you through this step by step. All right, I'm inside Stake now. The first thing you want to do is tap on the search icon, the little magnifying glass. And this is where you can find any ETF or stock. For this example, I'm going to type in SCHD. Now, SCHD is a dividend ETF, which means it invests in companies that pay regular income. At the moment, it's roughly yielding around 3 to 4% per year. Now, just to be clear, what you invest in is completely up to you. These are just examples to educate you on what you can do. Other ETFs you might come across include VOO, which tracks the S&P 500, VTI, which tracks the total US market, VYM, or HDV, which are also focused on dividends. The key idea is simple. Instead of trying to pick individual stocks, you're buying a basket of companies all at once. Now let's click into SCHD. You'll see the price, the chart, and some performance history. Don't overthink this part. As a beginner, your goal is not to find the perfect investment. It's just to get started. Now I'm going to tap buy. This is where most beginners start to hesitate, but I'll walk you through it. Now here's something really important. You don't need to buy a full share. Stake allows fractional investing. So instead, what we want to do is switch this to a limit order. Let's say you enter $100. Even if the ETF price is higher, you'll still own a fraction of that ETF. This is one of the biggest mindset shifts. You don't need a lot of money to start. You just need to start. Now this next step is critical. By default, you'll usually see something called a market order. Do not just click buy using a market order without understanding it. A market order basically means, I'll pay whatever price is available right now. And that can lead to overpaying. For example, if the ETF is showing at $100, but the next available seller is at $101, you'll get filled at that higher price instantly. So instead, what we want to do is switch this to a limit order. A limit order means you choose the price you're willing to pay. So for example, you might set your price at $99.50. Now your order will only go through if the market comes down to your price. This is simple risk management. You stay in control, you avoid emotional decisions, and you don't overpay. Now once that's set, you'll see your order summary. This shows your investment amount, your limit price, and how much of the ETF you're buying. Just take a second to check everything looks right. Then you hit confirm, and that's it. You've just placed your first ETF order. Now if your price is reached, the order fills automatically. If not, it simply sits there until the market comes down to your price. Now let's make this real with a few simple examples. Let's say you start with $100 and invest into a dividend ETF like SCHD. At a 3 to 4% yield, you might earn around $3 to $4 per year in dividends to start. That might not sound like much, but when you keep investing and reinvesting those dividends, that's where compounding starts to build real wealth. Now let's say you invest $500 every month. You might split that between a growth ETF like VOO and a dividend ETF like SCHD. Now you're building two things at once, growth from the market and income from dividends. And here's the big one. What happens when the market drops? Most beginners panic. They stop investing or they sell. But experienced investors do the opposite. They keep buying because they're buying the same assets at lower prices. And this brings us to the most important part, psychology. Investing is not hard. Controlling your emotions is. You'll feel fear when markets drop. You'll feel FOMO when markets go up. And you'll feel doubt when nothing seems to be happening. But the people who succeed long-term, they stay consistent, they stick to the plan, and they don't let emotions drive their decisions. So here are a few simple rules you can follow. Start small, invest regularly, use limit orders, and think long-term. So here's what I want you to do after this video. If you haven't already, use the Stake link in the description to sign up. Deposit any amount, even $50 or $100. Search for a simple ETF like VOO or SCHD, use a limit order, and buy your first fraction. Just remember, this is not financial advice. This is general education only. Always do your own research and consider your own situation. If you found this helpful, like the video and subscribe for more simple investing content. And remember, you don't need to be perfect to start. You just need to start.